As we go forward here, rates backing up are not having the same negative impact that they had a couple of months ago. And I think that's because earnings continue to come in better than expected, which goes back to our high nominal growth world point of view that, again, we've been expressing all year. When you have nominal growth of 8 to 10% and your earnings consensus bar is 2%, that's not a hard bar to beat.
NFTs have had, let's say, a mixed reception. They exploded in popularity during the pandemic, especially in 2021, but they weren't for everyone. And interest in them has fizzled considerably this year. Nonetheless, there are many out there still building in this space and trying to use NFT technology in increasingly interesting ways. That's true for businesses, but it's also true for other things as well. So in this episode, we're taking a closer look at how NFTs can work to help things that go beyond the bottom line.
The S&P Global Services PMI for October just came in at 46.6. The S&P Global Manufacturing PMI at 49.9. Now, when both of these fall below 50, well, that's a pretty reliable signal that the global economy is in contraction. Commodity prices have been retreating, supply chain bottlenecks by way of shipping rates have been easing, and a long list of other leading economic indicators suggest we're headed for a downturn. Now, historically, this type of an environment has led to falling bond yields, but today, well, they're hitting new highs. So what gives? That's today's big conversation.
It's interesting, just to go back to your comment on the analyst side of it. If we go back to and this goes way back into a different millennium, when I worked at Merrill Lynch down in Australia, and the rule there was that, and I'm thinking specifically of the banks analysts, that they weren't allowed to have a buy across all of the banks. And too often I see analysts in a lot of different banks and so forth just have buys. Yeah. And just no sells. There's a few holds in there, but it's all buys. And they've been caught unawares during this market, and they're really left holding the bag. So, and it's a lot to reflect on. And I think a lot of these broker dealers have to have a solid, hard look at their analysts on having all these buy recommendations.
And what about on the short side?
Again, I said Meta before, and I'm going to stick with Meta as the place you'd want to fade it. If you own it, I would sell it going into the report. And if you're a hedge fund and you can go short, I think this is an opportune way to potentially double your money. Stock went out at around 130. It broke down from 165, a key level that counts to about $100 on the downside. We get a bigger measured move target off the larger degree pattern, though, to about $60, which marks a range of about 30 to 110% profit potential from a short sale here.